Good morning everyone, this is Iosif, analyst at IronFX, bringing you the morning comment for the 21st of February. Theresa May under fire. Theresa May came under friendly fire yesterday as a group of 62 Tory Parliament members signed a letter demanding a clear Brexit. The group amounts enough members to trigger a leadership bid against May within the Conservative Party. The timing of the letter is also crucial, as the UK cabinet is to retreat to the countryside in order to reach Brexit decisions tomorrow. Further uncertainty regarding Brexit and the inner political stage could undermine the GBP in the short term. Cable traded in a sideways manner in the past few days, below the 1.4040 resistance level. The UK employment data, as well as the inflation report hearing, could subdue any possible negative Brexit headlines, at least for today, and support the pound. However, the US financial data, and especially the FOMC January meeting minutes, could support the US dollar. We see the case for the pair to continue in a sideways manner in the short term. However, some bullish tones could be expected for the pair. For our view to change to the negative, we would require a clear break of the upward trend line incepted since the 11th of January and tested on the 9th and 14th of February. Should the pair find buying orders along its path, we could see it breaking the 1.4040 resistance line and aim for the 1.4168 resistance hurdle. Should the pair come under selling interest, we could see it breaking the pre-mentioned upward trend line and the 1.3850 support line. A trade war in sights? The EU Commission has expressed its concern about possible US measures to curb imports of steel and aluminium. German officials stated that we must first wait and see. However, also clearly stated that the EU will respond accordingly should the US proceed with tariffs or import curbs. On other news, Japan's steel industry stated that US Commerce Department proposal to President Trump violates the principles of free trade. Should there be further headline escalation of a possible trade war, we could see Japanese yen and euro weakening in the short term. Euro-dollar, as analyzed yesterday, traded in a sideways manner with a bearish mood, breaking the 1.2355 support level, now turned to resistance. We see the case for the pair to continue to trade in that manner, as both fundamentals and technicals seems to convert in that direction. On the technical side, we would like to point out that the pair is currently testing once more the upward trend line, incepted since the 18th of December. Should the bulls take the driver's seat, we could see the pair breaking the 1.2355 resistance level and aim for the 1.2455 resistance hurdle. On the other hand, should the bears have the upper hand on the market, the pair may break the pre-mentioned upward trend line and the 1.2230 support line and aim for the 1.21 support barrier. In today's other economic events, during the European morning, we get Germany's, France's and Eurozone's preliminary PMIs for February, all dropping slightly and could weaken the euro somewhat. Later on, we get the UK employment data, which could support the GBP. Please be advised for the upcoming inflation report hearing in the UK, and any possible mentioning of more future rate hikes by Bank of England could also support the GBP. In the American session, we get the US preliminary manufacturing PMI for February and the US existing home sales for January. Last but not least, the January FOMC meeting minutes will be released, and any hawkish tone in their content could support the US dollar. For more information, please read the full comment on IronFX.com or download the app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Iosif, analyst at IronFX, wishing you solid trading.